After the Fed has revised its inflation policy, market participants are now sure that it will not raise its interest rate in the long term. Such a shift in policy is likely to affect the US dollar adversely. Following Jerome Powell's speech at the Jackson Hole Economic Symposium, other US bank officials, including Atlanta Fed Chief Raphael Bostic and Federal Reserve Vice Chair Richard Clarida, took the dovish stance on monetary policy as well. The FOMC members noted that the pace of recovery of the US economy has slowed significantly. However, they also set a low unemployment rate by itself, in the absence of evidence that price inflation is running, will not be a sufficient trigger for policy action. No wonder investors have many doubts about the stable recovery of the US labor market. Most analysts are anticipating the non-farm payrolls report that is due on Friday. Yet they are expecting rather pessimistic results. The US dollar index dived below the level of 92 amid the current market sentiment. It's consolidating near the 91.80 level. The greenback is also pressurized by the ongoing political conflict in the United States. Trump has already received as many votes as his opponent in the presidential election race in many states. It means that the debate about the $1 trillion aid package in Congress will be delayed again. Traders' unwillingness to open long deals on the US dollar undermined the correctional movement of the yen-dollar pair. It's trading sideways between 105.60 and 106.10. During today's Asian session, the pair extended losses. So our yesterday's forecast about the pair falling to the lower border of the price channel at 104.90 looks more and more likely. Meanwhile, China unveiled another strong economic report. Economists confirmed a solid overall improvement in the state of China's economy. In August, China's manufacturing activity expanded at the highest pace since 2011. The manufacturing PMI totaled 53.1 points. Versus the US dollar, the Aussie is climbing up. It's trying to break above the resistance level at 0.7396 and develop a rally to a two-year high. It may well rise to the level of 0.75 amid positive economic news and the weakness of the US currency across the board. The Australian dollar also added gains after today's meeting of the Reserve Bank of Australia. The regulator decided to keep its key rate unchanged. Reserve Bank of Australia Governor Philip Lowe said the bank would hold the cash rate at 0.25% until progress in being made towards full employment and stable inflation. The Aussie is likely to advance more amid positive trends in the commodity market. For more details, watch our next video on InstaForex TV channel. That's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.